Hey everyone, and in today's lesson we will discuss a very important topic about SnD zones quality. It's the continuation of the lesson we discussed about structure, so now you can begin to understand. So you are not only having structural ranges quality but also SnD quality, and if you can find high quality structural range plus high quality SnD zone, then it means your overall setup probability is higher and you can use it all to your advantage. First of all, we have 6 basic qualities of SnD, and I don't want to say that you want to have them all in all your trades, because to be honest, it will be really hard to have a decent number of trades if you have an approach when you want to have like 100% quality zone. So it's just your guidelines about how a good zone can look like, and then you can decide maybe when you have like 2 or 3 qualities available in this specific SnD, then you understand that it's a good zone. And of course later, when you will know about confirmation, context, multi-time frame analysis, you will be able to combine different qualities of structure, different qualities of SnD. You'll be able to combine them to define what are you looking for. Is it an A quality setup? Is it a high quality setup, or is it a low quality setup, which we all will discuss in the future. So our first point is clear, obvious zone, as close to a full body candle as possible. So what it means simply is you want to find a zone with a candle that will look like this candle. So with a candle that will look like this candle, almost a full body candle. And on the contrary, if you are looking at your zone with a candle like this, so with big wicks and small body, all like this, like small doji candle, it means that there is no volume in these candles, probably, most likely no volume. So the volume can be big, by the way, but there is no one-sided move, no one-sided manipulated move happening in this candle. Because when you have a candle like this down move and then up move from the candle, it means that the volume was there and the manipulative orders really came in on this candle, and we can expect for the price to move away from this zone clearly. Now let's find examples of the zones which could look like what I'm trying to tell you. So this is the first example. You see a down move, and by the way, if you have a wick to the right of your candle in the direction of the SnD zone, it makes sense to include it in the zone, because as you know already, what is happening in this wick is the continuation of this down move. So again, we are not trading candles but trading moves. We want to see the moves. So this is an example of a high quality zone. Again, I'm not tying myself to the structure right now for the sake of explanation, and so again, this is like educational lesson, not a backtesting or anything. So I'm just showing you how a good zone can look like. Again, this one, sometimes you can combine 2 or 3 candles, of course, because as you know, when you have a move out from the zone, you can view the SnD zone as a big one, but then find the root of the move, like in this example, and then refine it to even smaller moves. But if we imagine that this was the root of the move, then for example we see that this candle is like pretty small in relation to the whole range, and I will talk about this a bit later. So we can include, we see that these two candles, they are on a bit higher time frame. It is one candle with imbalance. So let's play with this, maybe switch to 6 hours, maybe switch to 8 hours. Yeah, so we see that on 8 hours it's almost perfect zone, so almost with no wicks or whatsoever. So once again, a good example of a zone. And this one is of course a zone of a lower quality. So a small body, wicks, we don't know what's happened there, just a sideways move, so no clear manipulation. But as you can see, by the way, it worked out really well. Now let's discuss the next quality. It is the move zone is almost the same on neighbor timeframes. So what I mean by that is sometimes when you see like a candle, if the move, so this is a zone, yeah, so this is a zone, this zone you have so you have some kind of a down move, and then the last candle, last down move and up move. And then when you switch inside, you can see that this one candle is clear, has two clear down candles inside, or three clear down candles inside, instead of having back and forth movement. And then you see, okay, so I see this down move here, I see this down move here. We see a clear manipulation happening. So sometimes it makes sense to check higher time frames, but not like 2 times higher. So if you are looking at 1 hour, maybe check 45 minutes, 1 hour, maybe 2 hours. And when you see that the move is so clear that it is represented on neighbor timeframes, it means that your zone is of better quality, because the volume is there, the direction is there. And a good example, by the way, is this one. Yeah, this zone we discussed right now. So on 8 hours we have one clear candle, and then when you have 4 hours you still have the same down move represented by 2 candles. So it would be even better, by the way, if this candle, this second candle, would be more like this one, so not so smaller, but it's fine. And again, let's look at this example. On 4 hours we have a clear move, but then on 2 hours we also have a clear down move. Still we have a clear down move. So some zones, they look clear on one time frame, but then when you switch on lower time frame, you will have something like this or something like this. So down candles interrupted by up candles, and so on. But these examples, they still have these down moves. And by the way, this zone is even better than this one in if we discuss this quality, because you see what happened: a down move and up move, so only down and up. But here you had a down and then up and down again. So inside, though on 8 hours we had one candle, we now see that on 2 hours we had other moves represented in this zone, and we don't consider it as a higher quality zone if we have something like this. Again, a reminder, if the zone has something like this, it does not mean you can't trade it. But if you have a choice to trade this zone or this zone, then take this one, because it's higher quality. Now let's talk about the next point. Is third point: the zone mitigated the previous big SnD or the previous route of the move. So what it means is that zones, one after another, are creating continuous movement of the structure, a wave-like movement. So first, let me draw it in a schematic. What I mean by that: if you have a market that is moving up, for example, and then you have this zone that mitigated some kind of a big SnD at least, or even if we imagine that this was the root of the move, so a pullback happened before the break here, and it mitigated it and then made a move away from it and then came back again, then for us it's another confirmation, another good quality sign, because now we understand that the smart money operator that is moving the market, it builds up the structure of the market, never leaving probably anything behind. So yes, of course, maybe it could leave some unmitigated zones and came back for even deeper mitigation, but usually when you have this wave-like movement, what it means is that we have a mitigation, continuation, mitigation, continuation. So almost the perfect structure of the market. And on the contrary, if you imagine a market like this, so, and now market came back to the zone. What you have here is a zone that actually missed the mitigation of this lower zone, lower big SnD or the root of the move, and now you have some imbalance below. And by the way, usually what it means is that your impulses become overextended in relation to the usual move of the market. And if you remember that in structural quality, this overextension is the sign of lower quality of the structure. So now let's switch to real chart and try to find this wave-like movement on the real chart. So this wave can be a good example. So what we have here is the market that had a break to the downside, creating this protected high, and then eventually broke it with this up move, creating this SnD. So first of all, is this one bigger, and we can refine it to some portion, some unmitigated portion of the price. But again, right now I want to focus more on how the market moved and mitigated consecutively different SnDs and structures. So what we have here is this break, and the market created this high. So creating the zone, and then it mitigated the zone. So you see, this zone was mitigated, and this zone created a new break to the upside. Again, I'm more looking it on a fractal base, but just to show you the structure overall and the zones overall. And then you see we had this move up and mitigation of this down move. Again, this zone was created. This zone was created, a move up and a mitigation of a zone. Again, creation of a new zone, a move up and mitigation of a bigger zone. And now, so what we have here is a new break, and we can consider this as a big zone, and again, mitigation of a zone. So this is an example when market mitigates some parts of bigger or smaller supply and demand zones. And now, and when we see something like this, usually it means that the market is going through some sort of building up, and then eventually it will go into markup stage, which we will discuss a bit later. But it's a good sign when we have these consecutive mitigations with no overextensions or whatsoever. And an example where we don't have this could be the following. Pay attention to this price action. So in this example, on lower time frames, we have structure that is mitigating zone after zone after zone, but then we have an overextended move which came from this big SnD. So if we want to just roughly represent the SnD, yeah, we can say that this is the bigger SnD that created this move, and then it created this pullback and one more zone, one more up move before the down move. You see? But what is the difference in this example from the previous example? Is that this zone never mitigated the previous one, so it never created this consecutive mitigation, and there is this imbalance between these two zones. And now when you will want to trade this one, you need to take into account that you have a space above, and now the market has higher chances to just liquidate this and go for mitigation of a higher zone, for example. And so, as a short conclusion, when you are thinking about this third point, ask yourself, did my zone mitigate anything before it? So is it building up from a previous structure, or is it just mitigated the air, so to say? Yeah, so there is an imbalance below this zone. And if you have something like this, then don't include this quality into the overall quality of your zone. Now, next one is connected to the previous section of the course about structure, and it says that this zone, this high quality zone, is a part of a high quality structural range. Yeah, so what it means is that yes, you can have a relatively high quality zone, but then you need to ask yourself, what is the structural range that is holding this zone? Is it high quality or is it low quality? So let's pay attention to this one. The zone itself is not that bad, and we have this break of structure, but now ask yourself, is this impulse, is the structural range is high quality? Yeah, the initial move is quite nice, but the break is weaky, it has deceleration in the end. Yeah, and so already not a high quality range, and so a low quality range results in a low quality SnD, even if it looks nice. Particularly it is so because we consider structure as our first point, as our main point in the strategy, and if the structure is weak, then you should consider not taking the SnD as well into account as a high quality zone. And now I want to show you an example where you have high quality range and high quality SnD. Okay, so this could be an example of a higher quality zone based on the range. Why? We have this break of structure here, and the move is not bad. So we have 4 candles in an impulse without interruptions, a tiny bit of weaky price action, but overall nice. Clear break, and we can use these 2 candles as our zone, so we have imbalance, because if we take this one, it was mitigated by this up move. So this is an example of a high quality zone. Let's find one more example. I like this example. What we have here is a market that broke this structure. So when you go from left to right, you will arrive at the point when you will see that this was the down move, and then this up move. Again, it's not perfect, you see. It should not be like 100% perfect, but at least the move is clear. Yes, there are some wiki price action inside, but overall it's clear. It has no this big deceleration in the end, and then it moves down. So overall it's an okay range. And then for the zone, this is an occasion when where it makes sense to view this zone as a collection of these three candles, so a down move, and then you can go inside and refine it. What we can see the market did is mitigated the last portion of this down move and then created the reaction from the zone. Probably there is something else inside. Okay. Next point is about the zone, which is a part of the root of the move. So again, let me quickly draw it for you. Imagine a market that is moving up, and then so let me switch. Oh, okay. So imagine a market that is moving up, and then it creates a down move with imbalance but no pullback, and a continuation. So now what you have, the root of the move is here, so this is the last pullback, so no pullback here but a down candle. And if you want to trade this kind of a zone, so away from the structural pullback, yeah, away from the root of the move, and if you don't remember what is that, there is a specific video about it, and you want to trade this zone, you should realize it's a lower probability setup, because usually the market will go and take something below this zone. So if you have a chance to wait for mitigation of this zone, then better do it. Of course, if you have a good confirmation here and lower time frames starting to show some bullishness again, it's okay to confirm. But just keep in mind, when you are dealing with a zone that is a part of the range that was set up by the root of the move, then it's much better. Particularly because when you are confirming the root of the move, you will have less losers, because sometimes you need to confirm once or twice before you have a winner, and then if you confirm something here, you can have a loser, then maybe you will take a break even, and then the market will break down to the main zone anyway. So yeah, something to keep in mind. And this is an example, so I think this is a pretty easy concept, so I will show one example. So this is our break of structure, and now we need to find the root of the move. Yeah, the big SnD is here, but it is so huge, then we go to the root of the move, the actual pullback before the break of structure that created this impulse. And now we have a choice. We can say that we want to trade, for example, this refined zone, this last down move before the up move, or we can also say we would like to confirm this one. That's also okay. But then if you go and say that you want to confirm this one, by the way, it worked. It was almost perfectly mitigated and worked in the end, but in this case this represents a lower quality zone because it's not a part of this structural pullback, it's not the part of the root of the move. Same thing here, we have a break with this white candle, and then we have a nice zone, And we have this down move before the continuation. And of course, it's better to confirm this lower zone as it represents the root of the move, as it's a part of the root of the move. Now, the zone, if it's a high quality zone, should not be too big in relation to the range, to its range, to its structural range. And in this case, we need to refine the zone. So why it should not be too big, even if it's a whole body candle? Yeah, because it will be really hard to confirm it. Imagine if this, so maybe let's switch to 2 days, maybe 3 days, and maybe even 4 days. Okay, so let me find a good example for you. Let's take a look at these two examples. So you have this low quality break of structure, and for example, for some reasons, you want to use this zone, yeah, this down move before the up move. So this is obviously a low quality zone because it's just too huge in relation to the range. It represents almost the whole range. And imagine if you go market taps into the zone, you go to lower time frames and start to confirm, you will be just taking loss after loss after loss eventually before the market goes in your direction. The same example is here. You have this break of structure, and then you might want to trade this zone, but it's so huge, it's almost half, even bigger than half of the range itself of the impulse. And so in this way you can start with this bigger zone, but then you can go and refine the zone to smaller parts or even smaller parts. And as you can see, some reaction went from the zone, but then the zone failed. And in this example, you could refine, of course, to this zone. So roughly, you are looking at zones that are like 5, 15, 20% of the range. So when you're looking at the move, you can have a half and then a quarter. And then if your zone is somewhere here or even smaller, that's already not too bad. That's already something to work with. Now we have our last point left is clear move away from the zone, because sometimes you can have a clear zone and obvious clear zone, like almost full body candle, but then the move from the zone could look like this, you know, starting to move, not mitigating, and then going for an impulse. When you see something like that, that means that there was probably no big intention from smart money operator to move from the zone, and in the future, when it will come back for mitigation, it will just grab liquidity below, and that's all. So usually the best zones, they show something like this. So a move down and a clear move up away from the zone. Let me find one more example. Yeah, move down and clear move up away from the zone. Move up, clear move away. Now let me show you not high quality move away from the zone. One more example. Yeah, move up, move down away from the zone, like really clear move away from the zone, and then mitigation and continuation down. This is an example of not clear move away from the zone. For example, if you, so first of all, it's all mitigated here, but imagine you have this week as your zone. Okay, you see what happens. Price moves down, but then returns up. Like moves down, moves sideways a bit, and then falls. So no clear move away. A clear move away from the zone, this one. This one is relatively so, yeah, average quality. Impulse went up, but then stuck with this weaker price action. This one is okay overall. And this is an example of not so high quality zones. So you see the market, yes, it's moving up overall, but what we have here, not only everything is mitigated, but so this zone is more or less fine, the move itself, but the zone of course is lower quality. But here, even if we imagine that this has an imbalance, you see how it moved. The move was, a break was not so strong from the zone, and then it moved down and then moved up again with all these wicks. So we understand now, because we know the fractal nature of the moves, we understand that though we have these 3 up candles, we see in the wicks that the move was like this. So the impulsive move that we expected, in fact, was this flaggy up crawl, so to say, up move. This one is real clear, yeah. So down move and up move away from the zone, and here again everything is mitigated here. This one, yeah, if we consider this as our zone, so again I'm not attaching myself to structure, but if we have this kind of zone and then a small impulse and then just consolidation, we don't consider it as a clear zone away from a clear move away from the zone. Okay, so these are the basic qualities of SnD, and of course you will have a homework where you will need to find SnDs with these qualities, right? So similar to what I did now, and send it to me and we will discuss and review all your work. Okay, happy trading. See you later.